Is, of course, your daily financial news. Hopefully, you are getting into the trend of watching the daily news show. We do it 7 days a week, which, yes, means we include Saturday and Sunday, obviously. Saturday and Sunday are interesting days. They're kind of days to reflect on what we've learned from the past, talk about what's coming in the future, and really set ourselves up for things. In addition to that, on Saturdays, we go ahead and do a live Q&A at 8 o'clock. So in about 29 minutes or so, we will do a live Q&A. And then for my students, we also open up a live stream in Facebook in our own little happy place on the internet where we talk and answer specific questions in a little more organized forum. I don't know about you, but Saturdays are a really good day for me. I understand what's going on. It helps me kind of figure out what's going forward. So I don't know about you, but I enjoy Saturdays. So let's get started. First thing that's coming up, we had our first new investor Q&A yesterday with Nathan. That went live yesterday. It didn't get a lot of views yet. I don't know if Friday afternoon is just a bad time to let stuff out, but if you're a new investor, if you're just a subscriber, you really need to look at that interview. It went out yesterday at, I don't know, 4 o'clock, I think. Because again, Nathan highlights what a lot of you likely are going through. Too much data, too much information. Where do I go? Where do I start? I'm doing stuff on Bigger Pockets and YouTube, and I'm not getting anywhere. So again, I'm doing these new investor interviews because I'm hoping to unlock themes. And if I can understand the themes, maybe there's something I could do different. Maybe there's something I could create. But I'm really looking forward to that. So I have 4 people lined up for Sunday, tomorrow. 3 of them are confirmed. I haven't got the 4th acknowledgement yet. They asked, I countered, I haven't responded. So we do have Sean at 8, Charlene at 9. We have Kyle at 11 confirmed. And Ursula, if you're watching this, I haven't got a confirmation from you yet for 10 o'clock. Maybe it doesn't work for you. I don't know. But Sean, Charlene, and Kyle, we are all locked in for tomorrow. So let's see what happens. On for the daily news. So last weekend, you may recall, and if you're not, you can go back and look at it because it's there. I put out a theory about the 10-year potentially hitting at some point last week 1.75. I was very clear saying that it would be a peak, it would bounce. I didn't think it would close there, but I thought it would hit it. And I put that out there, and I think we were trading at like 1.62 heading in or out of the week before into this week. And I said, what do you think's the over under? Most of you watching didn't think we would hit it. We hit it. I think we hit it twice. I know we hit it on Thursday, and we might have brushed it on Friday. So let's continue the theme. Do you think we might hit 1.85 the next 5 days? Or do you think Powell and his buddies in the Fed will successfully talk down rates? I don't know. I think rates go up until the day Powell does Operation Twist. Operation Twist is coming. He probably doesn't want to admit it, but it is coming. He probably wants to hold it till next meeting. I don't know that the bond market, the bond vigilantes, whatever you want to call them, is going to give them a chance to do that. If we eventually hit, let's say we hit 2% on the 10-year by April 15th, he'll come out with Operation Twist early. So again, let me know, over under. We did this last week, and it's going to be 1.85. Do you think we will brush, touch, whatever? Doesn't have to be a close, but we have to hit 1.85 on the 10-year. That's obviously important for all of us as real estate investors because that's the first link in the chain for rates. And rates are going higher. Not only are rates going higher, but we are seeing changes in lending, in rules, in standards, in down payments, in fees. It's getting more expensive out there. So let's figure out what's going on in rates. First and foremost, one of the things I noted when I looked at the week ahead, there are tons. I'm sure it's happened before, but in my recent memory, I do not remember a week so full of Fed speak. And what I mean by Fed speak is they have scheduled presentations. Each Fed member has a chance to I'm going to say, surprise the market. If they're not all on the same talk track, it can be disruptive. And one of the things that I took away from their Fed summary on Wednesday that nobody else talked about, and that's fine. I look for unusual things, clearly, because I'm trying to play the game with my personal money years in advance. The thing that I took away from the Fed's meeting on Wednesday is they are increasingly not in agreement. What do I mean by that? If you looked at the Fed summary from about 4 or 5 months ago, they were all saying the same thing. Rates are going to be low. Their dot plot, if you've ever heard about that, everybody was like, rates are going to stay low forever. They're never going to change. I'm playing, but essentially, they were all saying the same thing. This session was different. You're starting to see a divergence. You actually saw people kind of indicate that their rates may rise this year. The average is still no rate increase to 2023. Yes, Powell can say that. Yes, Wall Street Journal can report that, Bloomberg and so forth. But when you look at the dot plot, there are more and more people calling for rate increases. It's not meaningful. It's not enough to affect the average yet. But the fact that you have some Fed presidents now saying, ooh, economy might start running hot, that is why I think this week's Fed talks, you might have a surprise out there because each Fed president has the right to their own opinion, and historically speaking, they will share it, and they're not in lockstep. So I'll go through that more when I share with you the week ahead, just how many Fed talks this week. It could be disruptive. This week could be interesting. So other things going on. I don't know if you heard this, but California, I talk about it. I live here. It's the largest state by population. Our governor, who thankfully I think is going to be at least we're going to have the opportunity to recall shortly. He did say that every adult in California will have there'll be enough vaccines if you'd like to take it in the next 5 to 6 weeks. That is definitely different. A lot of this vaccine talk and inflation and stimulus and unemployment extension really has me thinking about July. Because why do I think about July? Because again, we're in this very noisy transition from the end of a dark tunnel to the light of better times, right? We're still probably in the dark, but when do you go from dark to not dark? It's kind of noisy. We'll never know, and we won't know until we look backwards. So I'm looking at July. Why July? Well, it's kind of middle of the month, middle of the year. I'm starting to ask myself right now, what is the consumer going to do in July? That's an important question for all of us. Has this crisis been enough to change consumer behavior in that we are going to continue to outsave historical norms? That's important. That changes the game. 2, are the rich and wealthy increasingly getting uncomfortable with where the Fed and Treasury are taking the dollar and printing and all of that? What is going on with rates, both short and long term? There's a lot going on right now. I'm spending a lot of time thinking about the second half of the year. That's what July is all about. I got a little comment here from Accrual World. Yeah, I totally agree. Consumers will start traveling, so much so that I already booked my trip 2 days ago, 3 days ago. We are already trying to book ahead, getting first class seats, all that stuff, because we know it's about to get expensive. That's at least our suspicion. So I am right there with you. As for the live Q&A, it starts in about 20 minutes. I see another little question here. So again, these are things I'm thinking about. It's really hard to kind of judge between now and July, because it'll be, are we in the dark period, light period, doesn't matter. But once we get in the light, we generally don't go backwards. That's why it's important. Once you make that transition from dark to light, you generally have periods of growth. That's why there was the roaring 20s after the pandemic of 1918. So these are things I'm looking at. I'm spending a lot of time trying to look at that period in history, and it's interesting because again, I share this stuff with you daily because I think about this stuff for my finances and my family going forward. So it's going to be very interesting. Friday also brings in inflation data. Again, that could be market moving. Although I got to tell you, like the unemployment rate, the U3 is spectacularly useless today. I think the Fed's inflation, I don't know, calculation is, it's I'm not sure actually what's more useless. I think U3 is probably more useless. I mean, it's just atrocious today. It's never been this bad because of everybody that's kind of given up to watch kids and all that stuff. U3 is terrible. Got to watch U6. But inflation data is right behind it. So, what does the week ahead have? Monday through Friday. We start off Monday. For us, we have existing home sales. This is important, right? What's going on with existing home sales? That's most of the market. Did the weather in Texas disrupt a lot of home sales? We've seen a lot of data the last week where people blamed the weather, right? Retail sales was blamed, unemployment was blamed. Let's see if it impacted existing home sales. We have 4 Fed presidents talking on Monday. I told you this is going to be a noisy week. We start off hot with 4 presidents. Tuesday, dude, GameStop comes out. Yeah, I don't know about you. I don't know to lick a GameStop. Would never play in such a highly manipulated stock, but I'm going to tune in because I think it goes spectacularly higher or spectacularly lower. It's going to be fun to watch. I don't have a penny in it and never would, but damn, it's going to be fun to watch. We also have Adobe, again, another software company that made the transition from perpetual to term. So we're going to see how that model is working. And on Tuesday, we have 6 Fed presidents talking, including Janet Yellen, the Treasury Secretary. Again, a very, very noisy day. Wednesday, KB Homes. We're going to see what's going on with KB Homes. I think we had Lennar last week. Generally good. They did not talk about lumber costs. They did not talk about rates. We'll see if KB Homes does. KB Homes is a little bit, I'd call KB Homes entry level, and Lennar move up. At least that's my opinion. You can tell me if you disagree. And we're going to have Winnebago, right? I think Winnebago is one of those companies like Clorox from last week that has to admit that the demand can't stay this high. They have pulled forward so much demand. Like if you had Winnebago stock, you could not have scripted a better 12 months. No air travel, don't be near anybody, don't go to hotels, go explore America in an RV. So I wonder if Winnebago is going to be like Clorox and go, you know what? We got a tough year of compares. There's no chance we hit them. They have to, right? Don't you think they have to? But we'll see. Wednesday, you got 4 Fed presidents talking. Then on Thursday, we got Darden Restaurants, one of the big restaurants. Really what I'm looking for is not their past quarter. I want to hear things like, you know what? We have seen an uptick in dine-in. We have had to hire back 5 or 10% of the people we let go. That's what I'm looking for with Darden because they're going to be an early indicator that, you know what? We have left the dark and entered the light. Restaurants, specifically dine-in. Then we're going to have initial jobless claims. Last week I was hoping for, praying for, didn't think it would come, and it didn't to break the 700,000 level. I'm just going to keep putting it out there. Let's hope we get under 700,000. Again, the peak from the Great Recession that I recall was 695. So the fact that we have had 52 weeks in a row above that number is frightening. Frightening. So let's hope we get under that because we got to break that trend. It's got to get steeper. We got to fix this going forward. And we have 3 Fed presidents talking. Again, very noisy week. The Fed, somebody in the Fed's going to say something the market doesn't like. That's just my fear. And it might be 2 people. Oh, not going to be good. And then on Friday, we got personal income and spending. And then finally, consumer sentiment. This channel is all based on consumers and cost of capital. We're going to get a lot of stuff about cost of capital and consumers this week. And again, what I'm doing is I'm looking at July and I'm asking myself, okay, what's going to go on? What is the consumer going to do? Are they going to bolt out of their house and buy experiences and memories and jump on airplanes and cruise ships? What's going to happen? Are they going to be like China last year where their consumers started buying Louis Vuitton bags and Prada bags and these expensive shoes and belts and clothes and jewelry because it was revenge buying? Or Is the consumer going to be so impacted by the last 15 months? They're going to go, you know what? We need to save more. We need to rebuild our reserves. What is going on? And then, of course, we've had the K-shaped recovery, and we've had this pretty much all year, and it has been painful to watch as an independent kind of observer of what's going on. What are we going to do to kind of address the facts so that we don't have this going forward? So at the end of the day, that's what I got for you today. We've got a live Q&A starting in about 14 minutes or so. If you come back for it, I will see you there. If I don't, enjoy your Saturday. Have a wonderful day. Today's a great day to make some money, and let's be a little bit better than yesterday. Take care. Bye-bye.